Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that ES put in a double top at 61 quarter and then pulled back to the overnight support, which was at 50 to 52, at which point responsive buyers stepped in. But at this point, the overnight session is very two-sided, and even overall this market is very two-sided, so we can see a move in either direction. There's really no big directional conviction one way or the other at this point heading into the open. The main question today is whether yesterday's reversal and short-term breakout is really going to hold, or if the overall weakness that we've seen in the markets over the last few days is going to persist, and we're going to get another leg lower. So we've seen there's been this positive divergence between the Russell and the S&P, but in the short term, that doesn't mean that the ES has to hold right here and go up. It can turn into a bigger pattern, and that's why it's good to be aware of that positive divergence, but we can't lean on it so much that at this point we only start looking for longs. The market can still put in a pullback, and especially within this range, where the market's trading right now, there's potential for the ES to pull back to 44.75 to 46.75, and even 37.5 to 39.5 if yesterday's breakout is going to fail. The resistance zone we had yesterday afternoon was 58 to 60. That was essentially tested late afternoon yesterday, and for the most part, ES failed at that zone in the overnight session. So, right now it can go either way. How it reacts to 54.75 will be a short-term tell. So, heading into the open, if we're holding below 54.75, then that is at the very minimum an indication that we're seeing a lack of strength in the market. If we start breaking above 54.75, then that means that ES is trading back within the overnight balance. And now if we start holding above 54.75 and balancing on strengthening internals and NQ gaining some strength, then it would open the door for a possible breakout above 58.5 to 60.5. But until then, it's a very neutral bias. Until we get a breakout above 58.5 to 60.5, the market can technically still fail at that zone and pull back to 49.51. 44.75 to 46.75 is the breakout from yesterday. Now we will have to be cautious at 44.75 to 46.75 because a break below 49 to 51 in itself would indicate weakness. So, today you do have to be pretty cautious because there is no clear directional bias. From yesterday, we know that the buy side was obviously dominant, and we saw a decent reversal. But on the bigger picture, this is still a very neutral bias or even a slightly bearish bias when you look at the S&P and NASDAQ. The reason for some of the bullishness was this big divergence between the other markets and the Russell, and for now the TF is holding up fairly well, but this creates a very mixed picture, right? There's no clear indication that the S&P has to break out, or that it's higher probability that ES will break out from here. The odds of it breaking out above 58.5 to 60.5 are about the same as the odds of ES going down and testing 37.5 to 39.5. So, today we do have to be nimble, we do have to be flexible with our intraday bias. So keep an eye on 54.75. The way ES reacts to that level will provide a pretty decent short-term indication on where we could be headed. 49 to 51 pre-market support, holding above that will tell us that this market is still kind of stuck in a range, stuck in a balance. A break below 49 is a signal for weakness, which is why 44.75 to 46.75 is, it's a valid support area, but it's an area where we need to exercise caution. It's certainly not a automatic buy. 37.5 to 39.5 is certainly a better support zone. By that point, ES would be short-term exhausted and hitting a decent support area. So at the very minimum, we can expect a reaction at that zone. And, depending on the level of weakness we're seeing, it's possible that 37.5 to 39.5 can even provide a reversal on the day time frame. So, that's a pretty zone pretty good zone to be active at for the buyers, and so we'll be aware of that. But at this point, there's no clear directional conviction in the market. For now, the buyers are holding it together, but it's a very two-sided picture. So if we start seeing some more weakness in the Russell and continued weakness in Nasdaq, then we definitely have to be careful on the long side. But at the same time, because it's such a mixed picture, it's not really that clear on where to enter short either. If you enter short too close to support, that can be pretty risky trade. If you're not getting good location on the short, where you have a clear-cut invalidation point, then again, it doesn't turn into a very good risk-reward setup, and the probabilities are a bit mixed. And that's what's really the challenge for today, is that it is a mixed picture, and it really can go in either direction. But because it's stuck in this range, even going short is not really going to be easy. It's not going to be clear-cut on where to enter short, and that's why it's Friday, end of the week. Yesterday we had a very good day. Let's pull back a bit, be a bit careful with the trades that we're taking today. If we have a clear setup, for example, if the market has balanced at 49 to 51 or above 49 to 51 for at least an hour or so, and then we break below that balance, now that's an independent trade setup where it's a short-term balance breakdown, and in which case we're not going to expect a reaction or much of a reaction at initial support. So we'll have to look for these smaller structures in order to find good setups today. Ideally, they are at the zones, but we are, I think, going to have to look for these intraday market structures to provide an indication of which side is being more dominant. We'll have to look to the internals and to NQ to see if the buyers are really still active, or if this is just a short-term bounce from yesterday, which is completely failing, and it can create another leg lower. So those are really the main ideas for today. It is a bit of a mixed picture, and that does create a challenging environment this morning. But I think that after the open, especially after the first 30 minutes, I think we'll have a much better idea on which side is really the dominant side on the day time frame. And also keep in mind that it could just be two-sided today too. So we could go down, test 37.5, 39.5, bounce back up, and just kind of fill in this 44.75 to 46.75 area, the breakout area from yesterday. So we'll have to see, is there extreme weakness that means that we can go much lower, or is it just more of a balanced type session? If we're seeing minus 1,000 to 1400 on the AD, that's typically more of a balanced type market. If we're seeing more extreme readings on the AD, then it's probably more of a directional market. And then on the upside, above 58.5, 60.5, the sellers can still be active at 65.5 to 67.5, and especially 73 to 75. So in the event of a continuation higher, we can still get rotations at the zones, and the next major zone would be 73 to 75. So those are our main thoughts heading into the open. Let's see which side ends up taking control and being more dominant, and we'll take it from there.